Good afternoon, Swing Chat channel. This is TraderSwift. It's Monday, August 19th, and I'm going to give a quick market update. Well, they haven't been quick lately, but we'll see how this goes. I'll definitely try to keep it under 20 minutes because I know I've been going long. Anyway, let's start with the QQQs. Wow, yeah, it was a day. We did gap up this morning. We gapped up mostly pre-market, and then we just kind of held up here right at this level, right at the prior week high, the week before last, prior week high, and we could not seem to get a footing on anywhere above that range. If I flip over to the 10-minute chart, you'll see the initial gap up, which happened overnight. It did try to rally above that a bit in the first 10 minutes of it, but as you noticed, even the volume those first 10 minutes was extremely low, and I noticed this initially, and then later on, up until about 10 a.m. We did break below that level, and we did find some support there, so that that was encouraging throughout the day. But the rest of the day, we really just kind of went back and forth on that line, and I have had that line drawn for almost a week now, maybe even longer. I say in time and time again, that's not magic. All that is me identifying levels based on volume or based on various swing points, and the reason why that swing point was identified the week before last is that when we did come down heavy on volume and we did rally back in some form of a retracement, that was the high. And so generally the market will remember these key swing points, and especially high volume swing points, and revisit them. And we did revisit it today. So now the big question is, do we continue higher prices tomorrow, or do we land back in this consolidation range again? And nobody really knows right now. But the way I see it, I did have some positions, and today, because the volume was so low, I mean, it was little more than half of what we had on Friday. And looks like well below the average volume line. So based on that criteria alone, and just kind of based on that, the entire movement was pre-market and not really during the market. That told me that throughout the day we pretty much had no volume-based confirmation whatsoever. So I don't trust this move. Could we keep going higher? Sure. Anything can happen, but at least in my opinion, the likelihood is that we continue to the downside a bit more throughout this week, and we'll likely want to retest this level here. We could stop below that. If you do notice, 2 days last week, we did find a resistance level. Basically at Friday's high, but it was also Wednesday's high. We could come back tomorrow, test that level, and if we find support there and maybe consolidate a bit more, we could be in for higher prices. But at least in the short-term period, it looks like we're going to come down and retest this area, this 183.66 area, and then as I've said many times, if we break through this level, we could definitely retest the lows of the most recent downdraft, and then worst case scenario, we break through that level, we're going to retest the lows from all the way back in June. Now, scaling out a bit, we could have more downside if we're in for a much longer bearish trend. But right now we're in Chop City. We came down, we've retraced on lighter volume, and now we're chopping. And when we do have a move like this, an A, B, C move, and the retracement is on lighter volume, you do have to assume that the move will continue. And if that move continues, This low is the B point, and then the D point is the low of June. So that's why even though I did take some positions earlier last week on on the rejection of this level, and then I held through that painful time. We had the update on Friday. I held through that, and then I took a lot of it off today. And I'll talk about that, just because sitting up here on light volume to me says it's not going to hold. And tomorrow we could open up a little bit. Maybe it'll sucker some more people in, but I expect it will sell off. If not tomorrow, on Wednesday. Now, the SPY, kind of the same thing. You see this hanging candle right out here. It's all alone. It's all alone up there with no volume, no support. It could potentially find support at at the low of this day, but I think that's unlikely. It did not find any resistance there, so it's unlikely it's going to find support there. And we're still below the 50-day, and I believe that the QQQs looks like we did close below the 50-day, so that also is not a positive sign necessarily. IWMs, couldn't even print a green candle today. I didn't look at that much throughout the day, but as I've talked about many times, the small caps have been weaker, and if I do look at the 10-minute, let's see what happened. So it did gap up, and I guess pretty strong throughout the day, but ended fairly weak near the lows. Gold also had a weak day, but it did find support. Looks like, not sure what level it found support off of, but again, I don't follow gold too closely, but I have been lately, so I'm also learning more about that. But it did find support. If the markets do continue to break down, I do expect gold to regain footing and potentially have higher prices. I'll keep an eye on it. Okay, my position. So as you know, yesterday I was in CrowdStrike, ARWR, Team, AYX, Coupa, Octa, and I'd mentioned yesterday that I was looking to get out of Octa because it had been acting weaker. Today Octa had a lot of trouble, just because it's in a similar class of software called to Zscaler, which got downgraded today, and as you see, had 11% hit. Octa was feeling a little bit of that pain, especially early on when the market first opened up. It did find a bit of support and bounced a bit, but ended the day much lower. So I'm actually completely out of Octa. I did get out, on this retracement, but I did take a loss there with Octa. Coupa, I also did get out, although I kind of debated back and forth. If normally I probably would have held Octa and would have held Coupa if the overall market had been a bit stronger, but I decided I had too many positions open. I wanted to lighten up a bit, just in case this was a more consolidation, more dead cat bounce, and we're actually in for lower prices. I wanted to lighten up a bit, and Octa was my weakest. Coupa has been acting as my second weakest, although Friday had a great day. I think in normal circumstances I would have held it above this 134 swing point, but I decided to get rid of it. I know I can always buy it back, and if I do buy it back, if we do have a few more days of downside action, I'm going to be looking to buy it back again off of the rejection of the 128.86 area. So I know I can always get back into it. It may also find support at the 50-day, and may continue to just consolidate here. And if it does that, I'm okay with that. I know I can always buy it back I just wanted to de-risk a bit. The same thing with AYX. I was down. I don't even remember. Maybe about 1.5%. Nothing too bad. I think normally I would have held it, and my stop would be below this 128 area. But considering everything else going on, I don't know. This light volume day with this big a move spooked me a bit. So I would rather just hold on to my money that I do have, and rather than risk more downside. So I thought it would be a good idea to raise my defenses a bit. This is another one I'm definitely keeping on my watch list. I mean, all of these are great stocks. Keeping it on my watch list, and upon breakout of 133.89 area, definitely could be a good buy again. And that may be as early as tomorrow, but we'll just see. If we have, if tomorrow's weak, and let's say Wednesday's weak, but Thursday's strong, maybe we do find support in this area, and I could pick it up there. I could also pick it up in this area, this 123 area. So we'll see. I just want to make sure that it doesn't break its overall upward pattern. It's still healthy. If you're a little bit of a longer term investor, it's still healthy. Nothing is wrong with this stock. So that's just something to consider. I like to hold a little bit shorter term, and especially when the market has been as choppy as it is. We've got major updates, major down days, etc. I just don't want to be whipsawed around. I've got other things to do. I've got other things to focus on sometimes throughout my day. So I don't want to have to be watching it every single minute. Let's see what else. Team, I also got out of this one. Had an okay day. Actually, Coupa had a bit of a profit. Team, I don't remember. After I did all my selling, I actually ended up very well in the green, but it's hard to remember position by position. But again, if it held above this level, this 143.93 area, if it made it up here and held above there, I would have held. But otherwise, I'm just trying to again de-risk a bit. And I ended up, some of you may have seen me post a little bit earlier in the afternoon, maybe at 1 or 2 o'clock, saying I sold half of almost everything. And then, later in the day, I ended up selling a little bit more just because, the volume never came in. And for a while there, it was looking like the QQQs, it was looking like it was actually even going to close below this line. So, that's part of my decision making there. CrowdStrike, I did stay in. I have a nice cushion here. I'm up probably right at 3.5%, something like that. I stayed in. I'm gonna watch it closely, and my stop will be just below this line because if we get back in this area, we could definitely retest these lower areas. Especially if the broader market is breaking down. But I wanted to stay in a few to the long side, and CrowdStrike has been one of my strongest positions. I also like today that it was up on heavier volume than Friday. So we've got a higher low, a higher high. We did make a new high today, and that is on heavier volume. So that's a very strong stock, and I have that cushion. So at worst, my stop is going to be break even, or slightly. Actually, it'll be slightly below because I'm not gonna. If it comes back and retests this area, I'm not gonna let myself get stopped out unless it really does break pattern and go in this area. ARWR definitely my winner for the week. I called this trade when I made it in swing chat. That I held, and after 2 days, so it looks like yesterday we're up 6.89%, today up 8%. I had an overall gain of around 14.5%. I sold today. I didn't sell all of it. I sold 80%. So just to kind of give you an idea, I don't talk about my position sizes too much, but I did. For this one, I did go in about a third of my normal position size. So I bought about 1,000 shares, or right at 1,000 shares, and I sold 800 of them today for a nice little profit. And the reason for that is, yes, it's been running, but one, I would have liked to see more higher volume. So this volume is above average. So 1.68 million shares versus 1.27 million shares, which is the average. It is accelerating slightly, but that's not very convincing. I would have loved to see double that, and I would have been a little more convinced. But the bigger factor there has been what is the broader market doing, and as choppy as it has been, I think it's just important to just take your money when it's in front of you, because it's been it's been rough lately. It's been a bit of a jungle. So I don't think any of you would give up 15% or 14.5% if presented to you tomorrow. So I wasn't going to let that happen to me today. I do think we have more upside. I mean, if I do zoom out a bit, count this as my A point, my B point, my C point. We do have quite a bit more upside, probably to about the 40 area. But I'm gonna watch it now. Ideally, what I would like to see personally is if SPY and QQQ do break down over the next couple days, we retrace a bit on lighter volume. I'm definitely going to pick up this probably the same amount of shares again. But I do still have the 20% of the original 200 shares at my original buy point, which was right around the swing point, around 30. I think it was like 30.16 or so. I forgot exactly, but it was right around there, right around that swing point. And what that'll do is, if it does retrace and I do buy back in, because of that profit, I could still have my stop below this swing point here, which really just sets up a nice trade. And we could see a lot higher prices. I really wanted to stay in this, but again, I haven't booked a ton of profit this month, just because it has been so choppy, and that's how it is. Swing trading, it's feast or famine. So I'll take that. Take it when you can get it, and then protect yourself so that when the market is trending higher, you can really exploit that and really grow your balance there. So that's ARWR. Let's look at a few others. Oh, actually, one thing I want to mention. So again, the pattern I'm looking for, if we do get a retracement, something like Shopify. Shopify did break out, it paused, and then it came back down. And this is exactly what I'll be looking for on ARWR, so I can add some shares back. But I definitely wanted to lock in that profit I had at the highs. Zscaler, as I mentioned earlier, it did have that downgrade. That downside movement was on heavy volume, and it's very heavy volume. I wouldn't get in front of this. Just let it do what it's going to do. It did find support at this this prior swing point, and hey, you could buy some there and set a tight stop below the low of today's low. But again, with the market the way it's been, I don't necessarily think the upside is in your favor. So I would be careful with what you're buying long right now. Shopify looks like it had an okay day. Stayed up there at the highs. on light volume. Nothing special there. Smart sheet tried to break out, really wanted to run. Once it broke past the swing point, we had this great day on Friday, broke out today, wanted to run. I feel like if the broader market ran it, we would have had a really big day with smart sheet, but that's not the case. It looks like it wants to retest this. Ideally, what I would like to see is if the indexes have some down days, it really just finds support here and consolidates a bit here, and then upon taking out of today's high, could be another good buy point. And a lot of these I haven't looked at, so I'm looking at for the first time. AMD got a bit of a bounce, but I could not hold it today. Chegg, I'm not gonna talk about. Beyond Meat. So I did buy 2 puts today. 2 puts in Beyond Meat and two contracts in Tesla. And the Beyond Meat one I did. If you look at the 10-minute, I bought it upon that second rejection here. So it came down the other day. Actually, I bought it on that. Sorry, on that rejection. But it's kind of based on, even though we had such an upside or such a gap up today, we really just could not get over this 148 level, and so basically once we rejected here, that's about when I bought, right around there, and that's I'm just buying a put because bought 2 contracts just because I feel like the 120 area is my price target. So we've got a little ABC structure setting up. So we have the downside on heavy volume. We've got retracement on lighter and lighter volume. If we do have downward action tomorrow, when it breaks this B point, that's when another trade could be taken. I could add to it, or I could just stay in my my current 2 puts and just let it play out until I hit my 120 price target. I like to buy puts a lot of times when shorting, just because the downside is limited to the prices of the contracts. I don't have the theoretical infinite level risk. But I did buy in the money puts, and they're the September monthly puts, so they're way out there. So not as risky as some of the shorter term weekly puts, but that's just how I do it. And I'm thinking of it more as a hedge for my CrowdStrike and ARWM positions I have open. But it's something I do. Probably not something I'm going to talk about a lot in the channel, because I think it's important that you get the fundamentals of just basic swing trading down before thinking about hedging. But hey, just trying to be an open book here. Neo looks like we tried to break out the new highs and gave it up. Today was not the day. Maybe any other day it could have happened. It would have been a good buy point across this 26 area, but we'll definitely keep an eye on that. And I'll just draw a line so that, remember, Zendesk looks like we got a little bit of a bounce, surprising, but hey, it's building cause for much lower prices. A point, B point, C point, D point, probably about right there. But I would not short this until it crosses the 73 area. Pace sign also tried to break out today. Didn't give up as much. The volume looks good. It's nice it was breaking out of this consolidation. Definitely going to keep an eye on this. But, again, I would be a bit cautious in taking Taking new positions. Roku held up at the highs. Rapid 7, just more consolidation. Zillow trying to bounce, not having a lot of luck. It has a lot more downward action to go. CyberArk, kind of same story, building that ABC down. Twilio, same story, building that ABC down, but probably with about a 119 or 120 price target there. That was MDB. I said the wrong thing. Zoom, just kind of hanging out there. BA, nothing. Work, wow, actually found a footing today, but again, did not break the downside pattern at all. So, I'm not interested. Just draw the line there. Looks like we may have tried, but yeah, not interested. See what Disney did. Workday, Fiverr. Maybe that's trying to turn around. Again, I'm not a buy the dip kind of person. I don't know. Maybe this will fit your scanners, but nothing I want to really get in front of right now. C Technologies. Now looks all right. Kind of hanging out up there. I should probably move that a little higher in my watch list. BLL made new highs today. Could not sustain, just probably given the broader market trends. I'll keep an eye on it. And Ring Central just kind of hung out there flat. Volume is a bit high on a flat day, so that could mean we've got some slow buying sellers, or we have slow selling sellers or slow buying buyers. So it's one of the two. We'll see what happens, and we'll just let price confirm. So that's it in a nutshell. Again, I failed at making this a short video, so maybe I should just start calling this your long market update. But hey, as you can see, a lot of these I don't look at all of them, especially when I have 4, 5, 6 open positions at a time. I am laser focused on those positions throughout the day because again, my number one goal is to keep my money. My secondary goal is to make money, and or maybe my number one goal is to keep money. Number two goal is to not lose money, and my third goal is to make money. And that comes with time and patience, and just if the market is acting right and you've got the wind at your back and you're in the leaders, I mean, you're going to be printing money. We're going to have days in the future where there's going to be many stocks like ARWR, and it's hard to go wrong. So, your goal right now is to not blow up your account, not lose money, not get chopped around so much that, you lose your confidence, that you significantly impact your balance. You don't want to do any of that. So, it's important. Keep trading light. Let the market decide where it wants to go. And then, once a trend is identified, then there's plenty of time to make money right now. But while we're in this chop, not good. And, it may take some time to identify the trend. Or we may have a short-term downtrend, which trading short is harder. In my opinion, because you've got higher volatility. You've got these massive down days. You've got these massive up days, with gap ups, gap down, etc. Definitely a lot harder to trade. Your stops are just going to be blown out over and over and over and over. The safer thing is just to not trade and just to watch. The next safest thing is to trade small. And just wait for another uptrend. If we take out these highs, these all-time highs and start, establishing a few weeks of upward momentum, we could really have another upward period. If you look at the weekly, we've had some good ones. Earlier this year, first 4 months of the year, it's hard to lose money in this time, unless if you're trading the right stocks, if you're trading the leaders, it's really hard to lose money in this time. But it's really, if you stay in those leaders, when we do have these small corrections, it's really easy to lose money. So either you'll get chopped out, or if you just buy and hold, you'll lose. Now, we have had longer uptrends. Looking last year, or all the way from 2016, you could just hold in that whole time. Then we got choppy, and then we continued higher. So this is what we're waiting for. So if you haven't been trading that long, I would just say hang in there and just really try to look at the longer term, and realize that there's plenty of time to make money. Once you do figure this out, the money will come. Getting rich overnight is it's just non-existent. I mean, you're not going to be an NBA player overnight. You've got to put in the time, and it does take time. It can take years. So that's the advice I have today. Hopefully it's helpful, and keep on trading. Keep your emotions in check, and keep your confidence high, because that's the number one thing you have. So yep, so that's it. I'm gonna wrap it up. It's been 32 minutes, so I apologize. And the ones of you that stuck until the end, I appreciate it, because I've been rambling on and on and on and on today. But I feel like these are fairly unique times, or at least this amount of choppiness is unique. So I'm just trying to just give my experience and hopefully be helpful to you. So, all right, take care and have a good night.